Ay, ay, ay. Hello, good morning. All right, some people are showing up. I just started, so I'm gonna wait a little bit, a couple minutes for some people to come in. If you're planning on sticking in this live, hit the screen a whole bunch. It brings in a lot of traffic. Currently, there are 0 likes. It doesn't really benefit me in any other way other than TikTok pushes out the view or the video on the algorithm. The more people are liking it right in the beginning of the live. Hey, Margo, good morning. So just tap your screen, 20, 30 seconds, and you'll see that when this number goes up, the amount of people, which is unfortunately covered, I got to change this template. It's uncovered. It's covered up by this template, but you'll see some more people will start joining pretty soon. I wonder if I can see it on TikTok on the website, just to know how many people are in here. Hey, Miss T, good morning. Let's see here. Will it show me? It says at the moment that there are 13 viewers. I wonder if I can change the thing. Whoops, got rid of it. Let's see if we can find a better template. I'll try to change it so we can see how many people are in here. Here, better template. Okay. Now we can see how many people are in here. 104. All right, that's better. Now I can see. Good morning. Okay. Hello. Hey, CK or KC, what's up? Good morning. Hello, Jim Bunny. Good morning. Margo, good morning. Pachanga number 1, what's up? Okay, now I can close this. Markets are down. It says stocks fall to start the week. Home Depot slides after earnings. Let's take a look at Home Depot and come prepared. Start asking your stock market questions and anything you want. Day trading, swing trading, ETFs, dividends, mutual funds. I just made a video for CKC who was asking about it. Actually, I think I did a video response to somebody else, but you also had a question on mutual funds versus ETFs. So I'll be posting that one a little bit later. What do you think the market is going to do today? Right now, it's down. And it's Home Depot's fault. It says here, Home Depot shares are trading lower after the company reported quarter 4 financial results that was lower than expected. Bummer. I don't understand this. Chris Bryant, you left a comment that was flagged. I have unflagged it, but your comment was bubble about to burst, and TikTok viewed that as inappropriate, so they flagged it. Don't know why. Let's see here if we can find what's going on with Home Depot. The only thing I can click on, no, here we go. Well, they are raising their dividend by 7.7%. They're increasing it 7% to $2.25. Let's see what it was before this thing kicks in. Their annual dividend is going from $2.31. Wait, what? It says here, raises quarterly dividend to $2.25. Oh, I see. So their current quarterly dividend is $2.09, and they're now moving it to $2.25. Okay. Good morning. Hey, from Berlin. Wow. I didn't know that you were all the way in Berlin. Let's see. Would you buy NVDA now before they announce their earnings next week? That's high risk. So normally I don't. Normally I stay away from a company's earnings. It's just too unpredictable. You have too many things going right now. So for example, today it's down 5%. And people with conspiracies will rush to say it's down 5% today because they know something. It's always they. They know something. They're dumping their shares. It could just be down in anticipation of a bad earnings based on Home Depot's earnings or based on other companies having weaker than expected earnings. It could also be down because people are locking in their profits. They're hedging their bets. They're saying, hey, this thing can't go up forever. It's already up huge. I'm going to take some gains. I'm going to take some money off the table. It could be that people are pulling back now, but anticipating a surge in the price. There's just so many variables. And then there's their actual earnings report, which can be really, really good. NVIDIA can come out and say, we crushed it. We had the best earnings report. We sold so much. We made so much. But next quarter or the next 3 quarters or the remainder of the year, we see a slowdown, we see slowing growth, we see some negative things, some negative headwinds, then even though they had good earnings, the stock could tank. Or they could say, the worst earnings, it was terrible, we missed by a mile, but our guidance for the next quarter is going to be really strong. So there's just too many variables. You do not need $25,000 to start day trading. That is with a pattern day trading rule. You can just have a cash account instead and trade with anything you want. And the $25,000 for the pattern day trading, it means that you can only make a certain amount of trades per week unless you have $25,000. So just don't trade with margin. Don't use a margin account. Use a cash account. That solves the problem. It only means that if you're using all of your cash on every single trade, that you'll have no money the next day, because in a margin account, your cash will appear right away. In a cash account, there's something called a settlement period, which can take 2 to 3 days for your money to return to your account after you've made the sale. So you make a trade on Monday, you sell the trade on Monday as well. You make a profit, and you use all the money in your account. You have $10,000 in your account. You make a trade for $10,000. You make $300 on the trade. Your money won't appear back in your account for 2 to 3 days because of this holding settlement period, which means that on Tuesday you can't make another trade because you've used all of your money. If you were to use $5,000 of your money on Monday and you had a settlement for 2 or 3 days, well, you'd still have $5,000 the next day in a cash account. So you can, as long as you're not using all of your money, you can kind of skirt around this. Apple's going to blow up soon as their AI-powered OS suite is released. Guessing cycle after next. Let me scooch in my chair a little bit. Or it could be market manipulation. It could be anything. And that's the hard thing to know with a company like NVIDIA, which is massive, and they've had explosive growth. Let's just see here. NVIDIA in the last year to date alone. So we are on February 20th. So basically just under 2 months of the year, and the stock is already up 40%. Most stocks don't go up 40%. I mean, you look at Altria, Big Tobacco hasn't gone up 40% in the last decade. Coca-Cola is up like 60% in the last decade. NVIDIA has done that, has gone up 40% in 2 months. So there's a lot to consider leading into their earnings, which is why I always sit out earnings. One option for people who are bullish, look, you could be right, or you could be wrong about everything. So if you're really, really bullish about NVIDIA and you wanted to buy 10 shares ahead of their earnings, one option would be you buy 5. That way, if you're right and the stock crushed earnings and it goes way up, at least you've got some skin in the game. And if you're wrong and it was a bad earnings report and it tanks, well, at least you didn't buy your full position right then, and you can average in at a lower price the next day when the stock tanks. Thoughts on Deckers Outdoor. It's $863 a share. Last year it went up 112%. This year it went up 29% alone already this year, which is incredible. Their growth is rated at a B+. Their profitability is an A. Their momentum is an A+. Their revisions is an A. The only bad grade they have is valuation D-, because it's very overvalued, which makes sense. It's up 112% last year, 30% this year. 30% this year. Let's take a look at their 1-year price target. It's $919 is their price target. It's currently $862. So that's around a 6.7% gain. If the analysts are correct, which we know analysts are right about 30% of the time, it doesn't mean that they're wrong, full out wrong, the other 70%. It just means if the analyst says, my price target is $919.75, that if the stock gets to $915, he's wrong, or she, or they. It has a strong buy rating from the analysts. There are 16 analysts covering Deckers Outdoor. Of the 16, 0 give it a sell, 4 give it a hold, 12 give it a buy. What do you think about Shell? I don't typically invest in oil companies because they pollute and they're bad for the planet. But oil and gas companies are lucrative and they do pay good dividends typically. Shell, I don't think that you're going to find... Oh, wait, hold on a second. Since going public in... they've only been public since 2022? That's bizarre to me. I didn't know that. But they do pay a solid dividend. 4.3% is very high. It has a dividend safety grade of D+, though, and that's not so high. I would probably look more to something like Occidental Petroleum, which is Oxy. Oh, yeah, it's not letting me click. Let's see here. Occidental Petroleum or Energy Transfer is another popular one that people seem to like. Occidental doesn't pay a high dividend. And they're also, in the last 10 years, they're down. Never mind. Maybe this isn't such a good one. Exxon, let's see what Exxon is doing. Exxon in the last 10 years, it's only up 9%. Pays a pretty okay dividend at 3.6%. Energy Transfer, hello to the 470 people who are in here. Energy Transfer is also oil and gas. They pay an 8.6% dividend, which is very high. And in the last year, they're also down 31%. All right, let's scroll down to the bottom. I'll work my way back up. Everything in your house comes from petroleum. That's true. That's true. Well, I don't know if everything does, but a lot does. Thoughts on NVIDIA's investment disclosures in SoundHound? I did hear about this. Someone asked about it last week. It's always promising when a mega cap company comes in and makes an investment in something smaller. I think it was like a very small amount of money, though. Let me look. I can't find the article now. Okay, here it is. SoundHound shares are trading higher after NVIDIA reports a 1.73 million share stake in the company. So NVIDIA bought 1.7 million shares of this company at $3 or whatever they paid for it. I mean, the stock's shot up since then, so maybe they paid it for $2, or maybe they got a deal and they were able to come in and do like pull a Warren Buffett and say like, here's what I'm going to pay for your stock. Let's see. In the last 5 days, it's up 76%. So $2.30 is maybe what NVIDIA paid. They bought 1 million shares. This is a company that has 255 million shares on the market, and NVIDIA bought 1.7 million. So it's a very, very small investment. It's promising. It's very interesting. Damaj is in here. Hello. How about Disney? Disney has a 1-year price target. Disney's actually been moving a lot pretty recently. Let's take a look at Disney here. Disney is currently 111, I think. Nope, it's down today. It's down 1.5%, but everything is down today. Disney is up 23% year to date. They have a 1-year price target. I think their 1-year price target was like 110. Oh, it's 115. So Disney has a 1-year price target of 115. That's around a 5.5% move to the upside. Their highest price target is 130. Their lowest is 82. There are 21 analysts covering Disney. Of those 21, 1 recommends you sell it, 4 recommend you hold it, 16 recommend that you buy it. Thoughts on Uber? I talk about Uber a lot on here. People always ask. Uber has a lot of analysts covering the stock. Let's see here. I'll pull it up in a second. It is currently $76, and it has a 1-year price target of 84. That is a 10% move, 10.5% move to the upside. Of the 37 analysts who are covering Uber, of the 37 who are covering it, 0 recommend that you sell it, 2 recommend you hold it, 35 recommend you buy it. Let's see. Bill Knight, 822, wash sales will get you when you want to trade a good stock. Yes, that's true. Wash sales will get you. I like Lunar. Short term. A wash sale, by the way, means you have 30 days after you buy or sell it to buy it back at a loss. If you sold it for a loss, you have to wait 30 days, or you cannot take the loss as a write-off. You could buy it back, you just don't get to write off that loss. Lunar, I don't know, man. This thing is down 77% last year. Year to date, it's up 293%. A penny stock that's already up 293% in the first 2 months of the year makes me kind of step back. It's $10 a share. I've seen it far too many times where these penny stocks rocket up in price and then lose value overnight. So for me, I would be in and out. I think a mistake a lot of new investors make is they say, oh man, this thing went up 293% in 2 months and I missed it. So I'm going to buy it now for the next 293% gain that it has. Doesn't always work that way. Sometimes you end up being the guy who bought it at the very, very top And now, I mean, who knows what happens. This thing, it's up 37% today. Someone's going to buy it today at 10:05. Maybe it goes to 11. Maybe it goes to 12. And then it crumbles. Are they going to take their profits, or are they going to go, no, I'm going to hold it until it doubles again? There's too many, it's too risky for me. If I were to do it, I would only put in what I was willing to lose. Speaking of which, Supermicro is a company that people were looking at last week when it was $1,000 a share, going, I should buy one share here because it's already gone up 700%, and now it is $735. It's down 8% today. It was down a bunch last week. Super high risk. How do you feel about T-bills with sky high rates? Treasury bills are a fine way to diversify your portfolio. This is for Jimmy. I don't invest in them because even though I'm bald and I have some gray in my beard, I'm still young. I tend to think of as treasury bills in two ways. One, they're for old people. My mom has bonds, CDs, stuff like that. And because she's made her money and she doesn't want to risk it. I mean, she still has some stocks, obviously, but she's mostly moved her money into safer things like CDs and bonds and treasury bills and stuff like that because she's not looking to make more money. She's already made it. She's looking to preserve it. The other reason that people like these things is because short term, they're worried about the state of the market. They think it's gone up too much, for example, but they still want to make a little bit. But I don't really care about short term because I'm a buy and hold. I'm going to be holding the stuff I have for the next 30 years. So I'm not really worried short term. If there is a recession, I'll just come in and buy more shares at a lower price. Another reason people like treasury bills, bonds, CDs is because they're planning for something big, a renovation, a new house. They need a lot of money for something significant, a big purchase that's coming that they know of. And they don't want to tie up their money in something volatile like the stock market. I mean, imagine if you were saying, I'm saving up my money for a house. I'm going to go buy stock in Supermicro and I'm going to buy $30,000 worth at $1,000. And now it's $737. And now it's time to buy that house or make that purchase. You have to then sell your Supermicro at a massive loss, and you have less money to pay for the house or the purchase or the big expense you needed. So if you're planning for something big and it's soon, within the next year or two, then treasury bills and CDs are great. What do you think about hydrogen fuel cells cars compared to electric vehicles? I think I think electric vehicles are still very, very new and they're in their infancy. And you can still see that people are really reluctant to buy them. Either they think they're a gimmick, they think they're equally as bad for the environment, they worry about range anxiety, they think the batteries can freeze in the winter. Remember, this is still a relatively new invention here. I mean, cars have been around, gas-fueled cars have been around for a very long time. Imagine whenever the first car was invented, how people looked at it versus like a horse and buggy. They were probably like, this is so stupid. This is a fad. This is a trend. No one's going to want this. And I think people are doing that now with electric vehicles. And 20, 30 years from now, when the technology is vastly different than it is now, people will be like, oh yeah, these are fantastic. And they figured out the science and they figured out the technology and ultra fast charging and blah, 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 and all the things. But it's still relatively new, and hydrogen is even newer. So I think it'll be in the future, but I wouldn't be looking for like hydrogen-based investments now other than a long-term, very highly speculative play. Any thoughts on DER? That's John Deere? Or no? What is DER? I don't know what that is. DER? DER? I don't know what that one is. Which stock is the strongest conservatively? Conservative stocks are usually stuff like very low risk, very low volatility stocks like Coca-Cola, Johnson & Johnson, Procter & Gamble, stuff that's been around 100 years. They're not really looking to grow anymore. So they're not like a Tesla or Rivian or something speculative. They're not like a Facebook or NVDA that's up tremendously, and they'll never be. They're companies like Altria, that's big tobacco. People smoke all over the world. So it's a little bit more conservative. They're not looking to have massive growth anymore. Okay, I'm going to go all the way to the bottom and I'll work my way back up to the top. I like Amazon, Apple, and Google and stuff. I like those too. Man, Walmart, their earnings is going up nicely, but 2 shares is all I can get now. Hey, 2 shares is more than zero. What do you think about the stock market dipping in the last 3 days? Not particularly worried about it because I'm a long-term investor. As a stock trader, it's an opportunity to get in on stuff that's hammered. Because we know by now that stocks usually go down, or markets, if they're going to go down for a period of days, it's usually 3 to 5. And then things recover for a little bit. They have a bounce, maybe a trade sideways. At the moment, there's a lot more to be conscious of. So we had a lot of big earnings. We have the Fed. Are they going to cut rates? When are they going to cut rates? First it was March. Now maybe I'm hearing May. How much are they going to cut it by? There's an election coming up. Elections are always volatile. Well, they're not always volatile, but this one seems like it's going to be, which could impact the markets. Wall Street doesn't care, I don't think, really who's in the White House as long as it's a 2-term president. They like to know. Wall Street doesn't like uncertainty. Wall Street doesn't like, oh, what if this guy is a 1-term president? They would rather have whoever is in the White House so they can plan for an 8-year period. They don't want to have to plan for an 8-year period and then find out that the guy is done after 4 years, and now a new guy is going to come in, and what's he going to do, and what's going to happen to the markets, and what's going to happen, especially someone as volatile and unpredictable as Trump. So I think this election will be a little bit different. However, we also know that historically, when the markets are up in the year of an election, the guy who's already in the White House typically wins. It's not accurate. It's just one of those, like, it's like the men's underwear index that says, like, when men stop buying underwear, it's a sign that a recession is coming. It's not real science. The media also makes EVs out to be worse than they really are for clicks. Maybe I don't pay too much attention to the overall media when it comes to the markets. I usually think something is going on when a talking head on a CNBC comes out and says that they really love something or they really hate it. I'm always like, Can you elaborate on why WWE? Yes, Luke, if you're still in here, you can see here, I wanted to be a pro wrestler. I'm a lifelong pro wrestling fan, and I also believe in investing in the companies that I know, use, and love. It doesn't always mean that it's a good investment. Peloton, for example, people love Peloton. The stock sucks. Snapchat, I think it's up this year, but it's been in a downtrend. Etsy, I mean, there are good companies. There are companies you love, but they don't always make a good investment. For me, I've always done well. These are my favorite long-term investments. I loved Apple. I loved Meta. I loved WWE. I thought Tesla was doing really innovative things in 2015, 2016 when I bought it. WWE, they went public in 1999. I was a teenager and I was like, I gotta own the stock. So we got on the phone, called my mom's brokerage. It was a terrible stock in the beginning, but I held it because I'm a lifelong pro wrestling fan. When they announced their WWE network, the stock took off. It was a guaranteed income of $10 a month for the company on content that they already owned. And they were producing more, but it wasn't like they were going to studios and paying and making movies. It was content that they already owned. So the overhead was very low, or the cost was very low for them. They didn't have to go and refilm 40 years of WrestleMania. They had them all. They had a lot of documentaries and a lot of videos, and so it was able to keep the cost of the network low and bring in a lot of new subscribers. And the stock went up over 950% in the last decade, which means that in that same period of time, it outperformed Apple stock, which at the time WWE switched over to TKO, the parent company of UFC, it was up 950%, and Apple had been up 915%. So way better performance than even Apple. People don't really realize that. How about Roku? Roku was one that it's done well, I think, in the last couple of years. In the last 5 years, it's up 25%. So I wouldn't even consider that doing well. You can see, I'm looking at a chart right now. During COVID, it went from $112 a share to $400, which is insane. And then it dropped right back down, and it's lower now. It's 66. When you have Apple and Amazon and Netflix doing similar things, I just don't really understand the appeal of Roku. I I don't know how to pronounce your username, but you're saying, should I buy Meta? I can't tell you what to buy. You have to do your own research and make the determination for yourself. Shane says, hey, Kenneth, bought NVIDIA at the top, thinking about selling some before earnings. Already talked about NVIDIA a lot. I'm going to be downloading this live and posting it on YouTube later today so you can go and watch it. It was one of the very first questions in this live from I think her name is Todi Virtual, who lives in Germany, I just learned. And she was asking, should I buy it ahead of earnings? So we had a big discussion about it. There's a lot of risks involved. It's your call if you want to lock in some gains now ahead of the earnings. You know, what would you do if it tanked? What would you do if it skyrocketed? You know, would you feel bad if you sold it and if you locked in some gains and it went to 750? Would you be kicking yourself? Alternatively, what if you didn't sell it and it went to 550? Alternatively, if you're a long-term buy and hold investor, it doesn't really matter. I am. So I bought it at 125 and 110 a long time ago. It's 686 now. Even if it drops to $500, I'm still going to be up. So why would I sell it now and then have to buy it back at a considerably higher price? I wouldn't do that. If anything, if their earnings were terrible, I would just go in and buy more shares because I'm buy and hold. I'm holding this thing for the long term. That's what I would do. Closed calls have many options. Then there's a typo there and have treasury bills in them though. Thoughts? I'm sorry, this is for kind-hearted. I didn't really understand your question. NVIDIA down, earnings tomorrow after the bell, sell, hold, bought 100 in the 100s. I did too. I bought it in the 100s too. I'm not selling mine. I don't care if their earnings are bad tomorrow because like I just said, it's going to cost me way more to buy back my position at 500 than what I paid in the 100s. So even if it goes down to 550, my profit's going to be a little bit smaller. I don't care. I'm still going to be up. And based on the earnings, if it's terrible, if it's a terrible, terrible earnings report, you know, I'll read it and I'll see what they say. If they say, hey, this is it for us, we've mismanaged things, it's going to be 10 years of terrible growth, then I'll probably sell it and take my gains. And even though it'll be slightly smaller than where it is now. But I don't think that's going to happen. I think they're going to come out and say, we had an okay earnings, or we had a bad earnings, or we had a good earnings. None of that stuff really matters. What matters is their guidance, and this is still a company that's growing rapidly. Amazon, I love it. I own it. What's the question? I mean, I can't tell you whether to buy it or not. Bill Gates' sell of his shares. I'm not really worried when billionaires sell off their shares. It doesn't really, sometimes they're selling off their shares because they're looking at their stock and they're going, oh man, this thing has had a massive run. I'm going to lock in some gains. That's all. Other times they think, I want to buy a super yacht or build a big mansion, or I need money for a new project. Usually doesn't concern me. Usually there's some personal reason, like they're raising capital, or they're just noticing that the stock went up and they're going to take some profits. It doesn't mean that Microsoft is done or Amazon is over because they sold their shares. They're usually just taking some profit. Not a big deal. Are there days where you get bored of trading? I haven't traded a stock in a year. I'm a full-time content creator on TikTok. Maybe I'll make a trade every now and again just for fun or to make a point for a video. But when I was actively trading, I would get bored sometimes. But that's the beauty of living below your means, at least for me. I'm not the kind of stock trader who lives lavishly. I don't make money in my stock trades and then go, oh, I made way more than I was thinking this month. I'm going to go buy a Lamborghini. I look at it as, oh, wow, I made way more than I was thinking. So the next 2 months, I can do whatever I want. Maybe I'll make a trade here and there, or maybe I'll go on vacation. I can do whatever I want. SoFi, I love SoFi. I own SoFi. It's, the analysts, let's see here. The analysts have a 1-year price target on SoFi of, I think it's $9. So it's currently $8.28. The 1-year price target is $9.13. That's about a 10% move from here. Their highest price target is $15. It has an average hold rating, though. There are 16 analysts who are covering SoFi. 4 sells, 4 buys, 8 holds. Gabriel says new or SoFi, but it auto-corrected to Sophie. They're both kind of similar. Nu is a Brazilian digital, online bank or whatever, and SoFi is also an online bank. They don't have physical locations. Nu is just based in, I think it's based in Brazil. Let me just double check. Yeah, it's in Sao Paulo. So, do you want to invest in a company that's based outside of the States, or not? That's your call. I own SoFi. You could own both. You could own one. It's your call. I can't tell you. We could make a comparison video though. I might put that on my list. I do like a stock fight playlist where I compare two similar stocks. So I might make one for that one. That's a good idea. Thoughts on Amazon? I think they're here to stay. I don't know if they're going to be the massive growth company that they once were. This is a stock that's up 860% in the last decade, and it looks like they've kind of leveled out. Like year to date, it's only up 9%, whereas other stuff like NVDA is up 30-40% in the year. Amazon is still going to be a growth company. I just don't think they're going to be as massively large or see as such massive growth going forward, just because they're in everything now and they've saturated every space. They've saturated it, but they haven't they have turned people off. People don't like the company, but they still use it. They use Prime, they use their pharmacy, they use their cloud, they use their music, they use their movies. What else do they do? They do their own drop shipping businesses. So I think Amazon is going to do fine. Do I think that they're going to have massive growth over the next decade? Probably not, would be my guess. The 1 year price target is 208. That's a 25% move. Of the 40 analysts who are covering it, 40 recommend you buy it. RUCA. I don't know what that means. Thoughts on WCN? This is for G Money. Waste Connections. Never heard of it. They have a very small dividend. In the last year, it's up 23%, which is pretty good. In the last 5 years, it's up 101%, which is very good. In the last decade, it's up 391%, which is very, very good. When you have a stock that's up almost 400%, who really cares if there's a 1 or 2% dividend, But it is nice to have it. It's a little bonus. They have a valuation grade of F, which means that it's very overvalued. The price to earnings ratio for the waste, environmental and facilities services sector, but let's just say waste because that's what it is 19 times earnings. Waste Connections is 35 times earnings. So it's a little bit overvalued. But, some people might be willing to pay a little bit more for Waste Connections. And I'm going to do another stock fight video. Waste Connection versus Waste Management would be a fun one to do. Their 1 year price target is 173. It's just under a 3% gain. So low dividend, a low price target, up around 3%. I feel like there's better investments. Thoughts on Lunar? I wouldn't touch it. Thoughts on Amazon or Google? I own both. I like both. I sold NVIDIA at 120, 140% gain. Highly regret the sale. Yeah, I mean, you don't know in the moment when you're selling it. You're sitting there thinking, oh my God, I'm up 140%. It would be crazy not to take it. I used to know 20 years ago, was it 20 years ago? I used to work the front desk at a gym. Maybe it was 15. Let's just say it was 15 years ago. 15 years ago, I used to work the front desk at a gym, and I was kind of getting into the stock market. And there was this guy who would come in and he would tell me about stocks that he liked. He had this rule that anytime he was up 100%, he would take 50% of the profit. But that was a different time 15 years ago. I would wonder if I could find this guy or if I knew who he was, if he changed that at all today. Maybe not, because he was already kind of old. So maybe he's fully moved away from stocks and he's in bonds and CDs. But maybe he's of the mindset now where we've seen such massive growth in the stock market where he says, when I'm up 500%, I take half of my profits. Or maybe he doesn't do that for anything at all ever. I mean, or maybe you don't have to going forward. That's the risk of picking individual stocks. You could say, hey, I'm up 140%. This is insane. I'm taking some money. And it could dump. It could be a flash in the pan like a Peloton or an Etsy or a Snapchat or something that has a massive run and then dumps off. And then you would have been sitting there going, oh man, I made the right call. This was really smart. Good for me. No way to know. That's the risk with individual stocks. How about Disney? What do you think, WWE or Netflix? Well, WWE and Netflix are two entirely different things now. WWE sold their network to Peacock, which is NBC. Disney, it has moderate growth potential, according to the analysts, but there might be better investments out there. Berkshire Hathaway is great. It's Warren Buffett's. You can't go wrong with it. I'm assuming hey, if you can buy one share of Class A shares, good for you. It's one share. The last time I checked, Berk.A, which is BRK.A, Berkshire Hathaway Class A shares, the last time I checked, it was $500,000 for one share. Today, it's $615,734.99. Imagine if you had purchased one share at $500,000. You would have a $115,000 profit already. That is insane. Insane. QYLD is a nice dividend as well as Vail. So they're very different investments. This is for 777777. QYLD is a covered call ETF that only sells covered calls. There are covered call ETFs like JEPI or JEPQ that do a hybrid approach. So they have some investments that they buy and hold, so you benefit from the markets going up. And the other half of their portfolio is covered calls, which in a very volatile market benefits you because they're able to sell those options contracts for higher premiums, which means higher dividends for you. If the markets are less volatile, then the dividend payment will come down. And if the market is in a downtrend, the dividends will go way down and the value of the fund will go way down. QYLD only sells covered calls. They don't do any hybrid approach. So you will see QYLD never really do well long term because their shares will keep getting called away. Hey, Ambitious, thank you for the heart cloud. Their shares will keep getting called away, so they'll have to keep repurchasing the shares at higher prices. Maybe 1 month they purchase it and it goes down. Maybe 1 month goes down for 2 months. Then the value of the fund is at a loss. QYLD year to date is up 0.81%. It pays a great, very high dividend. I like QYLD. And Vail is extremely different. Vail is not a covered call ETF. Vail is just an energy mining steel. I think it's steel materials. Let's see. It says steel. I guess they're a steel mining company. The stock is down a lot. So yes, they offer a great dividend. It's 5.81%. But if you had purchased it a year ago, that 5.81% wouldn't have done a whole lot for you because the stock went down 21%. Year to date, the stock is down 16.5%. So a high dividend doesn't always make it a worthwhile investment. They've also they have a D- dividend safety grade, which means that it's at very high risk of being cut. So Vail or Vail, whatever, is at high risk. I wouldn't touch it personally. What do you think of AI stock? I like AI stocks. I think it's a good sector for the long term as a small part of a diversified portfolio. Whether you want to buy a couple of individual stocks that you are basically betting on, or an AI ETF is your call. I bet you might not have known this, but if you go on Seeking Alpha's website, you can use their search bar as not just to type in ticker symbols, but to find things. So if you're interested in artificial intelligence, you can go and type in artificial intelligence ETFs and a list will pop up and you can do your research from there. Disney, we've already talked about. Uber, we've already talked about. I'm going to be putting this live on YouTube later today, so if you want to go back and watch it. Tony Menendez says, thank you for all the good information. You're welcome. Okay, I think I'm all caught up. I'm going to drop down to the bottom and work my way back up. Do you own any REITs? Yes, Realty Income is great. It's the most popular one. Hi, Kenneth. What do you think? Many people saying 90% of traders fail to beat the markets. Is it true? First of all, NYC Food Blog is a must follow whether you live in New York City or not. The food looks incredible. Yes, 90% of traders lose money. 100% accurate, true statement. But that's traders, not investors. And there's a big difference. So people who are trying to actively trade for a job, like what I've done for the last 13 years, 90% of them lose. And the reason really comes down to the mental side of things. You have to understand that a lot of new traders are coming into this extremely inexperienced. And thanks to apps like this and Instagram, they see the world of stock trading as something that it really isn't for most stock traders. Most of the trendy videos you see about stock trading are some guy with a Rolex with a Lamborghini behind him. He's getting on a private jet and he's saying, buy my course. And when you go on his website, his stock trading course is like $500 or $1,000, or he has a small group on Discord where everyone pays him $100 a month. And he's making so much money off of you guys and is saying it's because of his stock trades. It's a lie. That he has to keep this lifestyle going because it's how he gets suckers to buy his course. You know, he says, if you buy my course, you can live the life that I live. It's like an infomercial from the 90s. And it usually makes the guy who's selling the course very wealthy, and the person who buys the course usually gets nothing. It doesn't mean that there aren't good courses. I have some friends who do stock trading courses, and they're very good at it, and they're very honest, and they come out with full transparency. Here's what I made, here's what I lost, blah, blah, blah. And they're not saying you can have a Lamborghini. So there are some people who have courses who are legit and honest, but most people come into stock trading watching those videos and thinking, oh, I'm going to get super rich, just throw money into a stock. And when it works out against them, they either sell it and they take a massive loss, or they never sell it. Thank you for the ice cream. They never sell it. And then they don't have money to trade with because they're down 70% on some penny stock. A lot of times also they can do their research, but their pride gets in the way. They found the stock, they researched it, they looked at the charts, they learned all about technical analysis. I can't be wrong. I picked it. I have to be right. And when it drops 30% in a day, like some volatile penny stocks can do, they don't pull the trigger and cut the loss. So they get burned, then they walk away from trading, they walk away from investing, they think it's all a scam, and they think it's rigged against them or whatever, when really they just didn't have a plan. So the most important part of stock trading is you need to have a plan. SPLG versus SPYG, they're two very different investments. It might not even be one versus the other, it could be both. SPYG is S&P 500 index fund, but it is focused on growth stocks only. So SPLG is an S&P 500 index fund. It holds 506 companies across all the sectors. SPYG is only the companies in the S&P 500 that are classified as high growth companies. So SPLG holds 506 companies. SPYG holds 227. In the last year, SPYG went up 28%. SPLG, I think, went up 21%. So because they have so much overlap, their gains are going to be near identical, but they do very different things. So I wouldn't consider it a one versus the other, because they're different. A comparison would be like SPLG versus, well, I don't even know if VOO is an apt comparison. But I guess what I'm trying to say is it doesn't always have to be one or the other. It could be both. Or you could just go with a different growth-based fund like VGT, which holds, let me see here, 315 companies, and last year went up 36%. I think XLK also went up a lot too. So I guess what I'm trying to say is a better comparison would be SPYG versus XLK or VGT, because they're more focused on growth. Last year, XLK went up 40%. I'm from Canada. Are Americans aware of Canadian banks and their awesome dividends? I believe so, but there are also foreign taxes involved. So even though you have really high dividends, as an American investor, we might often pay higher foreign taxes to invest in those companies. Also, this is for Chris, who left the comment. For whatever reason, your comment was flagged. I don't know why, but I have unflagged it. Thoughts on X-Trackers, AI, and big data? That's a fund, right? X-Trackers, AI. Wasn't X Trackers. Do you have the symbol for that one? Because I don't see the symbols. But Toady, if you let me know the symbols, I'll look at them. Thoughts on JP Morgan and Blackstone? JP Morgan, let's see. Oops, clicked on the wrong thing. JP Morgan in the last year went up 27%. This year it's up almost 6%. In the last 5 years, it went up 71%. In the last 10 years, it went up 212%. So a lot of growth. It pays an okay dividend. Let's take a look at their 1 year target. According to the analysts, it could go up to 192. It's about a 7% move to the upside. Of the 23 analysts who are covering it, 0 recommend you sell it, 6 recommend you hold it, 17 recommend that you buy it. JP Morgan also has a 1 year price target of 192 average. Their highest price target is 238. And your other one was Blackstone. Let's see, BX. In the last 10 years, it went up 300%. So it went up a little bit more than JP Morgan over the last 10-year period. And they have a 1 year price target of, let's see, it's currently 126 and their 1 year price target is 128. So 1.87%. But it's split evenly. There are 16 analysts covering it, 0 sells, 8 holds, 8 buy recommendations. So it's split down the center. So if you were to go on which one has the higher growth potential for the next year, it would be JP Morgan. I have QYLD and TSLY, great dividends. TSLY is extremely risky right now. That one makes me nervous only because, oops, what did I just do? No. Okay. Closed all my browsers. TSLY is down 48% last year. So even though they have a really high dividend, it's just across the board pretty bad. Their momentum is rated F. Their expenses are rated F. Their risk is high risk, rated F. It's got liquidity of A+, which means that they're able to sell their shares if they have to in a panic. And they have an A+ for their dividend, obviously, because it's 89%, which is insane. But just being down as much as it's down makes me really nervous. I saw a follow-up comment that said that they're planning on doing a split, but I don't see that. And a reverse split, too, is even worse. Um, 7 days ago. Okay. The board has announced a 1-for-2. So it's a reverse split, which means for every one share for every 2 shares you have, you're going to get 1. So if you had 100, you are now going to end up with 50. It's going to help raise the price a little bit, but this is usually seen as a desperation move, and Wall Street and investors typically see through it. Usually what happens is when a stock gets hammered this hard, it loses credibility. The stock price looks weak, and visually, investors don't want to touch it because, oh man, it's down 70%, it's down 50%, whatever. In this case, it's not true, but in other cases, a stock can go from being a regular stock to a penny stock. It can go from $20 to $3, and that looks bad visually for the company. They don't want their stock to be $3, so they do a reverse split. A prime example is AMC. AMC was like $3 a share. They did this massive reverse split, and it went from $3 to $20. It's visual. And it doesn't work because people understand the negatives behind it, which means the company's really in trouble. And so look what happened. AMC did this massive split, reverse split, going from $3 to $20, and now it's $4.62. So reverse splits usually sign of trouble. Would you buy into the S&P 500? I have been, and I always will. I'm always going to be investing in an S&P 500 index fund until I retire. Are gold stocks a good option today? I don't know why today. Why today versus yesterday or last week? The question you have to ask yourself is, are you investing for the next decade or the next 20, 30 years? Gold will probably go up over the next 30 years. Is it a good standalone investment? No. In the last decade, it went up 47%. An S&P 500 index fund went up 170% in the last decade. But as a good part of a diversified portfolio, sure. One option for you would be to look at something like GLD, which is the Gold Shares ETF. Their top holding, which is their only holding, is physical gold. What trades have you done today? None. I haven't traded a stock in over a year, really, full-time. I'm full-time right now, TikTok content creator. I haven't been trading. I think the last stock that I traded was Spirit Airlines, last 2 or 3 weeks ago. Kai JB12 says, best index or ETFs, check the playlist. I have playlists on everything. Would you buy Berkshire B? Yeah, I used to own it. Thoughts on Realty Income? It's one of the greatest real estate investment trusts around. What's going on with the NASDAQ? I think the headlines today were that, the headlines today were Home Depot slid after earnings. So I think that's what's going on. I think it's just a general market pullback. Everything's been up like crazy. Jake Riddy is asking about SMCI. We were talking about this last week in my live. This is the risk of buying a stock that's overextended. Last week, SMCI was $1,004. Today, it's $698. Very high risk. Monday Night Raw moving to Netflix next year. I know, I'm very excited. Which analysts do you like and follow? None. I don't pay attention to analysts. I'll look at the 1 year price targets, but there's not like a particular analyst that I really like. Chris Tuffer says, not sure why people sell instead of following with a trailing stop. Same. Rich Guy says, buy guys. I don't know what that means. Guys, look into XRP. Please don't spam my thing. Someone says, are you aware of the bread company? What bread company? Crypto Bull is here. Legends will be made. Okay. Barracks Gold is another one. Yes. What do you think of, this is for Danny Dan. What do you think of NCOR or EQNR? Never heard of it. EQNR is Equinor. It's $25 a share. It's down 12% last year. It's down 20% this year. It has a 4% dividend, but I don't care about a 4% dividend when the stock is just getting hammered like this. I'd stay away. I don't even know what the company does, but I'd stay away. Thoughts on crypto? I love it. I own it. Thoughts on Barrick Gold? Not familiar too much with the stock. Let's see. They have a C+ dividend safety grade. In the last 10 years, the stock is down 28%. So no, I would just go with GLD, the gold ETF that owns physical gold if I wanted gold exposure. Palantir I own, I like. Any YouTube channel or course you recommend? Yes, my YouTube channel. The link is in my bio. If you go on my homepage here on TikTok and you see Instagram, click on Instagram. A little pull-down tab will pop open, and it'll give you a link to click to get to my YouTube channel. My YouTube channel has probably 500 or 600 videos. Most of them are long form on how to start investing, how to start trading, going over more specifics in dividends and fundamental analysis. So, and I have 2 playlists on investing. I have one or two on, I know I have 2 on stock trading. I know I have one called Investing for Beginners, which the first several videos are broken up like a course, but it is not because I'm not charging. What do you think about the bull run? Happy about it. I like bull runs. Ethereum is 3,000. That's good. I own Ethereum, so I like it. What do you think about Palantir? I like it. I own it. I think they're going to do very well long-term because of AI and their government contracts. It has a 1 year price target of $18, but it's already surpassed that price target. It's $22.88 right now. Their highest price target is $30. What if there was a private equity firm that bought a company you wanted to invest in? Can I invest? I'm not sure I understand the question. Thoughts on 0-day SPX options? I don't trade options, so I couldn't tell you. What long-term stock do you expect to go the furthest? Of these, probably Apple or Meta. SMCI, high risk now. I mean, I wouldn't have touched it when it was 600 and it went to 1,000, and I'm glad because now it's 700. I mean, it's just too high risk for me. I wouldn't touch something that's up that much. Why is Google not one of your long terms? They are. These are my long-term investments that I've held since. So WWE on IPO day in 1999, I bought it. That's why it's listed here. I'm not recommending these. I'm not saying these are what you should buy for the long term. I'm saying these are what I bought. These are my favorite long-term investments. I bought WWE in 1999. I bought Apple in 2003. I bought Meta in 2012. I bought Tesla in 2016. I bought Google a couple years ago, but it hasn't been my favorite because these are all up hundreds, if not thousands of percent. Flabbergasted, do you ever day trade or trade crypto? Yes. I don't trade crypto just because it'll drive me nuts because it's 24 hours. And I like that the markets are open and close on a set period of time so I can work and then have it be done. And with crypto, I used to trade it when crypto was like first becoming very popular. And I would wake up at 2 and 3 and 4 and 5 almost every hour while I was trying to sleep to check my crypto. And that was making me insane. Why would they sell at the same time though, billionaires? Tax season, maybe they sold for tax write-offs, or maybe they I hear Robin. Hello. Would you all like to see Robin? She's gonna freak out when I put the camera on her. Robin, say hi to TikTok. Robin, come here. Hi. Hi, Robin. She hates the camera, so it's amazing she's even stayed. And there she goes. Just a coincidence. By the way, when these people have sold, they're not saying I'm selling on Tuesday. They've already sold, and they're just disclosing that their trades a month or 2 or 3 later. So it could have been that they sold it for tax purposes in 2023 at the end of the year. There's a lot of reasons. Hi, what are your thoughts on Palantir? We've talked about Palantir. I like it. I own it. Are you familiar with SoFi? Yes, I'm very familiar. I own it. Any new stocks you're going into with this market right now? No, not really. I mean, I think people on social media are always looking for like the next stock. And for me, after a while, you have what you have. I'm not constantly looking to buy new stocks. I'm not constantly looking to make new investments. What are you buying that's new? That's going to drive you crazy. Just pick a couple investments you really like. Maybe you're mostly in ETFs and index funds. Maybe you want to have a couple individual stocks just for funsies or whatever. But I'm not constantly looking to add new things. Most of the new investments, my newest investments are things that I purchased at least a year ago. The last one I purchased was Kava. Let's see. The last one I purchased really that was a fully new position was Kava. Zaya says, I'm new here. I opened a stock account. What is the first stock to buy and at what price? Don't worry about the price and don't worry about individual stocks. If you're new, focus on ETFs or index funds. That would be that's what I would urge you to consider. I can't give financial advice. When you leave this video, go watch the pinned video on my page. It says new to investing, do this. As a new investor looking to buy individual stocks is too much of a roll of the dice. You're saying, I want this one. You could be right, you could be wrong. Just go with a broad market index fund. Don't worry about the price. Just pick something, you're holding it for the next 30 years. You're not buying an investment because you hope you're gonna get rich tomorrow. Unless you're trying to day trade, which is a totally different story. Dustin, thank you for the follow. I bought it at 50 and sold it at 120, should have held. I think a lot of people are saying that about NVIDIA. What about the cruise lines? I think the cruise lines are always going to be popular. I think they're also up a lot. Let's see. Carnival Cruise Lines is up 27% last year alone. Year to date, it's down 20%. Royal Caribbean. Hi, Robin. Royal Caribbean last year went up 55%. This year, it is down 11%. Maybe there's a buying opportunity there. Maybe you want to stay away. Toady Virtual says you bought it at 125. I assume you're talking about NVIDIA. Yes. Let me see. I'm gonna pull it up and I'll tell you. I bought NVIDIA on September 23rd of 2022 at 125 per share. Then a month later, I bought it at 120. 125. Then a month later, I bought it at 122. Then a month after that, I bought it at 110. Then I bought more at 155. I bought even more at 389. I bought even more at 455, and I bought even more at 413. And then I bought more at 380 and 400. So I'm buying it all the way up. Someone is asking to short NVIDIA before earnings. High risk. That's up to you. My free resource guide that I see Eddie is asking about is on my website. My website is just my name. It's kennethsuna.com. Click on the menu. I have a lot of people who DM me and they go, I went on your website. I couldn't find it. You lied to me. The menu is those three little bars for people who don't know that is going to be down here on your phone or up there on your computer. Click on it. It'll pop open. There's a guide. There are 2 templates in there that are free as well. There's also a dividend fact sheet that kind of explains a little bit more what dividends are, because people have so much information. They say, like, why would I invest in this company? It'll take me 40 years to pay back my investment. That's not the point of dividends. So there's a little fact sheet there as well for people who don't know about dividends and want to learn a little bit more. Where do you think the price of crude oil is headed? Couldn't tell you. I'll just drip my Walmart and get out of it. Hopefully Split's not going to pay $180 a piece. Yeah, it is splitting. The split is coming. It's a 3-for-1 split. So you can divide the current price of the stock by 3, and it'll be around, like, what is it? It's 177 right now. So it'll be around $59 after the split. What about cruise stocks? I like cruise stocks. They're down a lot right now, but I think that they'll probably have a little bit of a surge in price as we get closer to summer and people will start booking their trips more. People tend to book their trips, warm weather trips, in the winter when they're cold. So we could see next quarter for the cruise lines have maybe some uptick in bookings, or maybe not. Flabbergasted has asked twice, do you day trade or trade crypto? Yes, I do. NVIDIA is down. I thought the earnings were tomorrow. Yeah, NVIDIA is down because earnings are tomorrow. People are anticipating maybe that it won't be a good earnings report. Home Depot had earnings today and it wasn't good. The stock dropped. So maybe people are looking, I know Home Depot and NVIDIA are different, but I guess the thought is, hey, people are spending less money at Home Depot. Maybe they're going to be spending less money on the smart technology that NVIDIA sells their chips to make wearables and gadgets and anything smart. This happens all the time, by the way. Anytime there's an earnings report the next day, the company either goes up in anticipation or down in anticipation. It's not a guarantee. Some people who are into like conspiracies are going like, if they know something, they're selling. You've seen it 1,000 times where a stock goes down ahead of earnings and then the earnings come out and the stock skyrockets. Don't drive yourself nuts with conspiracies and don't worry too much about who knows what. We'll see tomorrow. Thoughts on LAC? Lithium. It's a penny stock. I don't usually touch penny stocks. Since going public, it is down 62%. Thoughts on Dollar General? I like Dollar General. It's on my wish list this year of stocks to buy that I have not yet purchased. They had a lot of mismanagement last year. It went down 37%. I viewed that as temporary, which is why I put it on my wish list. I don't really know of any IPOs at the moment, but normally I stay away from IPOs. I think IPOs generally are pretty risky. The stock comes out, it gets a lot of hype, it skyrockets, it tanks. I've only purchased on IPO a few times. I purchased WWE on IPO day, Meta on IPO day, and Kava on IPO day. Those are the only 3 I ever bought. Thoughts on Bezos and Congress selling stocks? Not worried about it. Usually these Congress and senators have to disclose it's over a 3-month period or something like that. So chances are they sold it last year for tax purposes, and that's why we're seeing it. I don't think it's a sign of like a recession is coming. They all know something. Although if there is a recession, people are going to say they knew it. I don't really care. I'm a buy and hold long-term investor, so I'm not really worried what Bezos did with his money. He probably just wants another super yacht. What stocks are you in right now? I don't share my portfolio. All right, I'm going to jump to the bottom. And because I'm wrapping this live up, I'm going to only do a couple more questions. What platform do you use? I use Schwab. I don't like it. I was TD Ameritrade. They got bought out by Schwab, so it is what it is. I'll stay. But I know a lot of people like Fidelity. Opinion on REITs, check my playlist. This is for Wild A. Check my playlist on REITs. I like them, but it has to be the right kind. Your thoughts on SMCI being down? We talked about it last week. I said anytime a stock is hitting these all-time highs, it's going to dump. People are going to take profits. You don't want to be the guy chasing a stock that's up 700%. So glad I never touched it. What is a reverse split? A reverse split, you can check the playlist. I have a whole playlist on splits that covers reverse splits as well. It's bad news. Have you reviewed Toyota? No, I haven't. Palantir, I like Palantir. I own it. Do you ever sell your stocks, or are you planning to keep them until retirement? I only really will plan on selling my stocks unless if something fundamentally changes with the company where I no longer think that they're going to be profitable or having high growth, or if I need that money for something else like a home. You bought NVDA at 730. I mean, it's always a high risk buying stocks when they're hitting new highs. We talked about it with SMCI last week. Are you into crypto at all? Yes, I am. Palantir and DraftKings, I own both and I like them. Should I invest at 19? Chris, if you're still in here, that would be the smartest thing you've ever done with your life. I would go S&P 500 and a couple other index funds. You can check my playlist. It's a pinned video on my homepage. It says new to investing, do this. Go watch that video. Hey, TD Ranch, good morning. Rock or Rhodes? Always picking the Rock. I don't like Cody Rhodes. I think he's a nice guy, but nice doesn't mean he's interesting. I'm bored. I don't care about his story. I hope he loses at WrestleMania, and I'm going to be at WrestleMania this year. So hopefully Roman Reigns wins and keeps that title. NVIDIA sell, I can't tell you what to do. Tesla outlook for the future, I think slower growth just because there's too much competition now. Hi, Robin. What are your favorite dog companies? Probably Chewy, but I don't own any. What are the top 5 best investments? Index funds. Tesla is a good buy low candidate, maybe, but I think that they have a lot of slow growth ahead of them. Does Burke Beer have a good support today? Let's see. Oh, we can't. My thing has crashed, and it's going to take a while to log back in. I like Berkshire B, though. Nothing is holding me back from buying it. I just have purchased all that I want right now for my investments, and there are other investments that I think could have higher returns, at least in the short term, that I would rather buy, but I still like Burke B. They are swing trading. Swing trading is always what I've always liked. Miss T, I see you in here, so I'm going to answer your question, but then we're going to wrap it up. It's BCE. I've never heard of it. Last year it went down 60%. This year it's down 3%. In the last 5 years, it's down 12%. In the last 10 years, it's down 11%. It has a 7% dividend, but I don't really care that their dividend is so good because the stock keeps losing value. They have a dividend safety grade of C, which is not great. Their 1-year price target, according to the analysts, is $40, which is a 6% move from where it currently is, although it has a moderate buy rating, which I don't really understand how it has a moderate buy when of the 11 analysts who are covering it, 8 recommend you hold it and 3 recommend you buy it. It feels to me like it's a hold rating. I'm heavy in cash. What do you recommend? Index funds, but I can't really recommend investments for you. You have to also consider that markets are at all-time highs. It doesn't really matter if you're buying for the next 30 years because every time in history when you look at things and you go, oh my God, it's at all-time highs, eventually they just go up longer term. So it doesn't really matter if you're a 30-year or 20 or 30-year horizon. If you're planning on starting now, it doesn't matter. If you're planning on buying a huge position right now, maybe you don't do that only because it's at all-time highs. But you could start building a position now. No, I don't trade options. All right, everybody. Daniel, you're asking about Jeppy. You can check the playlist. Palantir, we've talked about already. I'm gonna wrap this live up, and I will be back on Thursday at 10. Is Kava still a good buy? I'm holding it for the next 30 years. If that gives you any insights into what I'm thinking. Can Asuna follow the creator? Haha, I don't think so. Block. You're done. Bye. Get out. I love when the copycat accounts just come into my lives. A reverse split, I mean, if you're already down 30%, it's probably going to go up a little short term after the split and then dump right back down. So I'd be very cautious I think you're at a loss. I mean, you could sell it at a 30% loss. I don't know what company it is. But at this point, you've already lost the money. Hey, Brandon Gentry, what is up? Hi, Robin. I think maybe it's time to go because someone wants to play. Robin. Oh, maybe she's going outside. Bye, Robin. TSLY is super high risk. All right, everyone. I'll talk to you later. I'll be back on Thursday at 10 a.m. For those who didn't get your question asked, you can ask about it somewhere else. You can DM me, or you can just come back on Thursday. Bye, everyone. Have a great day. Bye, Coco.